Morning, everybody. Mike Tedeschi, Wealth Management Advisor over at Perspective Wealth Planning. With this week's market breakdown video, we're going to take a look at the four major U.S. indexes, as well as the emerging markets, gold and oil, and some sentiment readings. If you guys find this content valuable, please subscribe to our channel so you can continue to see this information on a weekly basis. Let's jump right into it. What I've got up here first and foremost is a monthly chart of the S&P 500. And what I wanted to talk about is we have really spent the majority of the last 3 years inside this range. We've had a couple of poke outs to the bottom. We were never able to close underneath of this zone on a monthly basis. Of course, we had the sell-off here this year, but also at the end of 2018 as well. And we spent a little bit of time above this basically 29-20 zone. Of course, that faltered here this year. This can be looked at as kind of that giant range and really where we make our next push, whether it's out of the top of the bottom of the box or the bottom of the box, is very, very important. We really have to zoom in here on a weekly time frame and a daily time frame to start finding some resistance levels here for the short term. So let's look at this in here on a weekly chart. One of the things that's very apparent here to me is this is really that major resistance zone that is the most important here over the last few years. We look at the beginning of 2018, we see right there, that is where we ultimately made our failure here at the bottom of this range. We did poke slightly above it. We're not able to hold above that, and we actually tried again in the beginning of 2019, and you'll notice how it acted as that resistance zone the end of 2019. And once we got that push to the upside, that was a very clean and clear breakout. When we fell back underneath of that, if we actually look at where we failed here and on this week, we failed right at the bottom of that box. All right, so we haven't been able to push back up into it. This whole area right here moving forward is that major resistance zone. So what happens in between 2850 and about 3020 is extremely important. If we were to get back over the top of this box, it would certainly leave all-time highs well within the realm of possibilities. But there is a lot of price action that goes back here over the last 3 years in this zone. This should not be easy, essentially, to get through. We may ultimately get through it at the end of the day, but there's going to be a lot of battle going on in this zone. If we look at this as that resistance zone and we look at this for a potential failure right up here, where is that next zone kind of support, that next zone of really important price action level here over the last few years? And it's right back down there at that 2600 level. Right. Remember, we talk about it all the time. It's not a number, it's a zone, and this is really that zone. When we look here, at the beginning of 2018, that's where we found our support. We found it again right here. We found it right here. The break underneath of it saw a continued push below. And once we got back up above it, we stayed above it until this year. And you notice when we started to have that push higher here over the last few weeks, the zone in which we were having a lot of difficulty getting back above was this right here. So if we were to continue to not be able to push higher from here, a pullback towards that 2600 level would be that major price action level here on the downside, right? And if we look at the way markets tend to move, they tend to move in two steps in one direction, one step in the opposite, two steps in the other direction, so on and so forth. So right here, if we were to make this failure, we could potentially see this kind of push if we are going to continue to see lower prices. That would be 2 steps down, 1 step back, 2 steps down. However, the other way to take a look at this is if you believe that this is the bottom that was put in, and we did make a bounce off of a major level. I'll pull this back up on a monthly chart so you guys can see it. We stopped falling right at that major breakout from 2016. So that was a big win for the bulls, so to speak here. But if we're looking at this as 2 steps down, 1 step up, and this is a bottom, this would be our 2 steps up, 1 step back. This would be the area that we then would be able to see that push forward. So what happens here in this zone is very, very, very important, and we continue to monitor this on a regular basis. Now, let's take a look at some very positive signs here, and then let's take a look at some negative signs as well. Positive, let's take a look at the Nasdaq. Here is the Nasdaq 100 weekly chart. Guys, the Nasdaq opened this year at 86.96, and it is at 85.90. So right now where it sits, the Nasdaq is down for the year 1%. So the clear leadership of this market, and again, didn't even come close to coming back to those 2018 lows that we talked about on the rest of the indexes that either came to that level or actually broke below it, right? It held strong. The Nasdaq is a leadership area of the market, has been for quite some time, and it is almost green on the year. That is a very, very positive sign. Now, the other way of thinking about this is the Nasdaq 100 is made up of mostly tech names that may not necessarily have a lot of issue if people are stuck in their homes. They may still be able to do business, right? We're still getting deliveries to our houses. We're watching movies and stuff on the internet. So there's a number of companies in the Nasdaq that actually benefit from the current setup of the world, and that might be the reason why we're leading. And when we look at other areas of the market, we can see lagging behavior, and one of the two of us ultimately may be telling the truth. Let's take a look at the Dow. The Dow, again, completely broke underneath that 2018 low and is still not back up above that resistance zone from last year. And of course, the Russell, we have talked about this many, many times. The regional banks, the mid caps, they are not doing well. We are still below those 2018 lows. So we have a very, very split market. Now, the Russell's been weak for a while, and we've talked about in a number of these videos a reason for that. We may not need massive participation out of the mid caps in order to continue to make new highs. We didn't over the last year or so as the market continued to push higher. So participation out of this area of the market may not be necessary in order for us to continue to push higher. However, if the Russell is trading at 5-year lows, that's very difficult for the rest of the market to ultimately come along. So we may not see new highs out of the Russell anytime soon, and we still could see new highs out of the Nasdaq here at some point in the near future. We take a look at some other areas of this market as well. Let's take a look at the transports. This is something that is very, very important when we take a look at Dow theory, right? And this is one of the things that we can actually point to as a signal that things were not okay even before this coronavirus ultimately sent this market lower. And that is, here's the Dow Jones Transport Index. It did not make a new high while the Dow Jones itself did. Right, the Dow Jones clearly made that new high and continued to push higher where the transports were not confirming. Right, Dow theory is talking about the companies that move goods and then the companies that sell them. And if one of them is not telling the same story as the other and you have that split, ultimately that is not a good sign. So when the transports are not moving as many goods around the country, they're not performing as well, the companies that make the goods ultimately will end up catching up to the fact that things are not moving as well. The transports are still extremely weak here. All right, so this is a very, very bizarre market environment where we have very weak results out of the mid and small caps. Financials do not look good here as well, with interest rates lower as well as their exposure in the oil space, and we'll get to oil here in a second. But the Nasdaq is looking extremely strong. So what's telling us the truth here? Is the Nasdaq going to continue to defy because it is mostly internet-based businesses that can continue to thrive and make money in a world where we don't leave our houses? That could be the case. So we may end up with new lows out of the Russell, new highs out of the Nasdaq, which would be a very, very bizarre scenario. But the way this world is set up right now is anyway but normal. Let's take a look at a couple of other areas of this market. Let's take a look at the emerging markets. Right, we've talked many, many times about this, and I leave my drawings up here on the chart so you guys can see it. Right, the Russell or the emerging markets have been in basically 3 different boxes here over the last 5 years. We found support right there on a very key level, and we've made that bounce back up. We're still trading well below the lows of 2018 there as well out of the emerging markets, and we're going to have to continue to pay attention to that. One of the things that, of course, is very important to the emerging markets is the price of oil. When we look here, this chart, I have it going all the way back now to the 1980s. You can see really when we go back into the 80s and 90s, we spent the majority of time in between these two zones. And the middle of that was also a very important level, and that was right in there at about that 18. We're still holding above that. But really, if we push any lower, we kind of open up the potential to see from a technical perspective oil back at that $10 range, which is crazy when you think that about the fact that it was in the mid 60s a few months ago. But here are those major support levels going back 40 years, 30, 40 years here on the chart. Really underneath of that, like 21 level is where bad things can happen. Really bad things can happen to the price of oil. So we're paying very, very close attention to what happens right here. It will, of course, have profound global impacts across the board. Gold continues to push higher and higher and higher. We look at this in on a monthly chart. As you guys know, we have been all over this now for years, and we made that breakout all the way back at 1300. We talked about how we had that potential long-term cup set up here for that breakout. We have continued to push. The major area that we had resistance was right in there at about that 1570 zone, and you'll notice at the middle end of last year, that's kind of where we stalled out, and we once again made a potential bull flag that ultimately did make that breakout and continue to push higher. Now, gold sold off with the rest of the market as well in the midst of that panic, right? People talked about gold was selling off because people had to raise cash to meet margin calls, and that's what they were selling. But really, regardless of what happened there, our support right in there at that 1450 level was really, really key. Pulled all the way back to that major support zone, held it, and now subsequently has continued to rock and roll higher. We are basically all the way at the top here in terms of closing basis. We've never closed a month over that 1820 level on gold. And really that 1750 zone, there's only 1 month where we closed up above it. We are running into that major long-term resistance here. If gold continues to push higher and gets over this range, we could continue to see a spectacular move to the upside. And there's a lot of things about gold here that make sense. If we think about everything that we've done from a policy perspective in the Fed in terms of printing and adding to the money supply here over the last month or two while dealing with the coronavirus, right? That's a debasement of currency. Gold being a hedge against inflation in the long run and as a store of value. If we continue to print more money and the dollar essentially loses value that way, gold itself would continue to push higher just on that kind of logic. And technically, it still looks very good. So this is an area we continue to pay very, very close attention to. Now, a couple other things I wanted to look at here that we always take a look at in these videos. Jump in here and take a look at the Dumb Money, Smart Money Confidence. We talk about that crossover happening in the past, and we're still looking at it. We have kind of come back up, but again, we're starting to turn back down a little bit here in terms of the confidence over the last couple of sessions. Again, we would kind of expect us eventually to get back up into that middle range, but we have seen it happen before, like we did back in here, where it continues to kind of expand after a little bit of a bounce. So that could be, something to definitely pay attention to here over the next week or two. We continue to talk about breadth readings in these videos as well. As we mentioned last time, really we're looking at the breadth reading to come back up into that 400 zone as that level of resistance. We're still way below zero at this point in time. Breadth still doesn't look good. But since we kind of bottomed here a couple of weeks ago, that has certainly rocketed higher, which has been a good sign. Again, there is a lot of work still to be done in order to fix the damage that has been done. So we are going to continue to pay very close attention to that as well. Takeaway from today's video, guys, we have a major resistance zone that we have pushed ourselves back up into here. The action that's going to take place over the next week or two is going to be very, very, very important. If we're able to get back up above it, that would really change the dynamic of everything. If we go back and we look at bear markets in the past, there is a lot of times a very sharp rally that ends up being a false rally in the beginning. If this is going to be another 2000, another 2008 type of environment, both of those had 50% retrace bounces in there and ultimately rolled back over. So while we have seen a great push here over the last few weeks, we are not out of the woods yet as far as the bulls are concerned. There is a lot of work that needs to be done back up at these levels. As always, guys, if you have any questions, comments, concerns, want to go over anything about the overall market, please feel free to reach out to me at 814-580-9881, or you can shoot me an email to mtedeschi@perspectivewealthplanning.com. I hope you guys have yourselves a fantastic week. Stay safe out there, and we'll see you guys next week. Take care.